What is PMI, Purchasing Managers Index? What is it? How does it work?
It gives early signs on inflation, labor. That's why it's so important.
What do you think would be like the highlight of other instruments that might be affected by PMI?
So those instruments tend to be more volatile around manufacturing PMI releases, especially from China and the US.
Many people in the media and elsewhere would say that the Chinese data are unreliable, whereas you would often find people saying that PMI data from China is going to be a lot more reliable than data on, for example, inflation or GDP. Do you have any thoughts on this?
Often not very reliable, but it tends to move the markets, which that's what matters.
I've actually found this to be the most personally useful in the series so far, because I've learned a lot of new things and more things I'm going to research. Hello and welcome back to Exness Trading Talks. Last week, in the episode on inflation, we looked at how inflation can influence and be influenced by sentiment. And now in this week's episode, we're going to be talking about Purchasing Managers Index, or PMI for short. What is it? Thresholds, regional aspects, and a prominent example of PMI affecting charts. If you haven't done so already, I'd encourage you to subscribe and turn on notifications so that you can be aware immediately when the new week's episode of Trading Talks comes out. I'm Michael Stark, Financial Content Leader, and joining me to give his insights and opinions is Andreas Themistokleous, Trading Content Specialist. Welcome, Andreas.
Hello, Michael. It's good to be back.
So the lowdown, and this is something that I'm definitely not an expert on at all. What is PMI, Purchasing Managers Index? What is it? How does it work?
Yeah, so it's basically a forward-looking survey, right? So the survey various purchasing managers, and their insight is really helpful because we get info on, are they ordering new materials? Are they hiring new people? Are they expanding production? So it's not lagging, but it's real-time insight on what people who actually take decisions in the markets, right, and move markets are doing. So it matters because it gives early signs on, inflation, labor, and different data. So that's why it's so important.
Yeah, and also trade potentially has some influence on trade. Okay, and what would you say are some of the important thresholds within it? Like, PMI usually is measured from 0 to 100. You're not going to see 0, you're not going to see 100 usually.
Yeah.
So what are some of the thresholds? What are some of the numbers that traders look for within releases, both in isolation and by comparison with previous releases?
Yeah, so you're right, it's from 0 to 100, it's measured in points, right? So the 50 points basis is the important or major number that traders are looking at. If the PMI comes out higher than 50, let's take, for example, the US manufacturing PMI. Right. If it comes out above the 50-point basis, that means that the manufacturing sector is expanding. Whereas if it comes out less than 50, that means that the manufacturing sector is contracting. Right. So the 50 basis point is the threshold that traders are looking at. So when we have, for example, previous figures less than 50, but the expectations are that it comes out above 50, that means that we have a shift from contraction to expanding of that sector. So the area near the 50 is also important.
And I mean, I think it's also important there. You're right. I would just add, we also kind of have to add the overall context because, for example, to get like a manufacturing PMI of 60 in Britain is like practically inconceivable. Yeah. Whereas for China, for example, given the context of how the economy is structured, then that seems, more possible. We're kind of expecting it to be positive and expanding in China. We're expecting it to be negative in Britain because of, for manufacturing specifically. Yeah.
Yeah.
Okay, and let's think about regions. Let's think a bit about both the main countries that we look at PMI for, which is probably USA and China, for example, and also any other regions that you think is relevant. I mean, how does the relative importance of it differ both between manufacturing and services in different countries?
Yeah, so we have three major regions that their PMIs are quite important for the markets. First up, obviously, is the US, which tends to move markets, both the manufacturing and the services. We also have the European one, which the S&P Global, where the services PMI is more important because the European manufacturing post-COVID is somewhat weak. So it's more focused on the services part. And then we have the China NBS and Caixin, which are both manufacturing, which tends to influence especially production-related instruments like steel, copper, and crude oil. So these are the three main regions.
Right, so very brief digression here. If we look at Chinese economic data, and this is obviously controversial, I would say I don't have a personal opinion or axe to grind here. Many people in the media and elsewhere would say that the Chinese data are unreliable. The government is just making it up as it goes along.
Yeah.
Whereas you would often find people saying that PMI data from China is going to be a lot more reliable than data on, for example, inflation or GDP. Do you have any thoughts on this?
Yeah, I do believe that, first of all, the Chinese manufacturing PMI is quite important for the market because it influences especially crude oil, right? And it's also breaking down into two separate numbers. We have the NBS manufacturing and also the Caixin. The NBS is larger in terms of it takes into account large state-owned companies, whereas the Caixin is more focused on the exporting sector, which is quite important for China, and also the small medium enterprises, the SMEs. So when the Caixin is beating expectations, let's say, it's quite important and bullish for the for crude oil because it directly affects the demand, because when you have higher Caixin numbers, then that means that the exporting sector is expanding, and as well the SMEs are also scaling up production, let's say. So we have higher demand, which then boosts the prices of crude oil. So Chinese data is often not very reliable. Yes, we have sometimes ridiculous numbers that looks like they are made up, but it tends to move the markets, which that's what matters.
Yeah, exactly. Yeah, that's the important thing in the end. It's just not to question reliability. So, and I think another point there, right? So we've talked a little bit about the influence of Chinese PMI on oil. If we think also about more widely traded shares, then potentially we're going to have some influence from PMI on the shares. I'll give you an example. If we're thinking about the FTSE 100, it's not totally dominated, but it has some considerable influence, let's say, from financial services. So as we can see the British service PMI going up, would you expect that shares of British banks, and so the FTSE 100, are also going to go up? Or would you expect it the opposite? Would you expect the shares go up first and then the PMI goes up second?
Personally, I think that PMI affects the shares. So I would expect the market to react right after the publication of PMI, especially for services if we're talking about the UK. So yeah, I think the one affects the other. So first the PMI, and then we have the reaction or the result, let's say, on the share price.
Okay, yeah, that's clear. And if you would like to find out more about how PMI specifically affects shares, stock markets in general, and Forex, please click on the link to read the article, and which is in the description just below. And that goes into a lot more detail about how PMI has an effect on these markets. And also, not just for PMI, but in general for all important data, I would encourage you to sign up to receive Exness's weekly report, which includes references to data points and charts for the most popular instruments available every week. Now let's think about an example. We talked a little bit earlier about Chinese Caixin PMI and its influence on crude oil. Can you give us a specific example of when a release of PMI has had a clear effect on the price of oil? And if so, can you draw any kind of conclusions from that?
Yeah, so if we take a look at the daily chart on crude oil here, we will see that on the last release on the Caixin manufacturing PMI was on the 1st of July, right? So if we take a look at the chart on that day, we see that in the immediate aftermath, the following days after that date, we see a pumping on the price of crude oil, exactly because the expectations were to go from 48.3 to 49, which is still below the 50 basis point, but the actual release came out at 50.4. That means it beat expectation and also shifted to expansion.
Right.
So that we see the immediate effect of that on the daily chart of crude oil.
Okay. And do you think apart from oil, there's some influence from PMI on other instruments? What do you think would be like the highlight of other instruments that might be affected by PMI apart from oil in China?
Yeah, it's usually production-related instruments like steel and copper, for example.
Yeah.
So those instruments tend to be more volatile around manufacturing PMI releases, especially from China and the US.
So around PMI, that gives us an opportunity in general to focus more on raw materials that are used to make finished goods.
Exactly.
Okay, right, that's clear. Thank you, Andreas. Thanks for being here, for sharing your opinions. I've actually found this to be the most personally useful in the series so far, because I've learned a lot of new things and more things I'm going to research.
Thank you very much.
So thanks for that. And thank you also to our viewers. And that concludes this particular episode about PMI. Next time, hopefully, you'll join us again when we're going to be talking about GDP, Gross Domestic Product. And if you've not done so already, please subscribe, turn on notifications so that you will be immediately aware when the next week's episode of Exness Trading Talks is released, and we hope to see you there.